Welcome back to Bazaar Morning Call. There are plenty of stocks to look at, and there's a lot of cheer actually this morning, led by some of the banking names. So let's get straight to it. Our list of top 10 stocks. Top of mind is Kotak Mahindra Bank. Finally, there's some clarity on the new CEO, and of course, there are the earnings as well. So let's take it straight to Abhishek now to give us the latest on that. Abhishek, morning.
Morning, Sonia. So as you mentioned, there is new MD and CEO at the helm of running Kotak Mahindra Bank from 1st of January 2024. That is Mr. Ashok Vaswani. Coming on to the results, what has worked is that the deposit growth on a YOY basis at about 23.3% is perhaps one of the best that you are seeing in last 20 quarters, and sequential growth in deposit is of 3.8%. Loan growth YOY at 18.5% is perhaps the best in last 3 quarters, and 6% sequential growth is perhaps the best in last 6 quarters. The subsidiaries quarterly PAT is the highest ever that they have recorded in a quarter. Now, what has not worked is that the deposit growth has come in at a huge cost. So net interest margin compression is higher than estimate. Street was working with an estimate of 15 basis point decline, but it has declined by 35 basis point. Slippages have increased. Annualized slippage ratio of 1.51% is perhaps the highest that you are seeing in last 5 quarters. Operating profits, they have declined by 6.9% quarter on quarter. Perhaps for the first time, you are seeing an operating profit decline quarter on quarter in last 5 quarters. In terms of P&L, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right. Got that on Kotak Mahindra Bank, Abhishek. But what about ICICI Bank?
Well, Nigel, records galore over there for ICICI Bank in Q2. In terms of all-time high, ROA and ROE of quarterly performance is at all-time high. Quarterly PAT of ICICI Pru, ICICI Sec and ICICI Home is at all-time high. So subsidiaries PAT is all-time high in terms of quarterly performance. Deposit growth 18.8% YOY is the best in last 10 quarters. And sequentially, the loan growth of 5% is perhaps the best in last 6 quarters. Overseas net interest margin is at 1.56%. So that's perhaps one of the best that you are seeing in last 7 years or 28 quarters. The unsecured book that continues to rise, it's at 24 quarter high of 20.75%, and that's aiding the net interest margin. In terms of stress, they are at 11 quarter low with restructured book at 0.32% and annualized slippage ratio of just 1.69%. On the flip side, like you are seeing for the sector as well, CASA ratio continues to decline and is one of the lowest that you are seeing in last 35 quarters. In terms of CASA per branch, that's the lowest that you are seeing in last 9 quarters. P&L, both the NI and PAT is a beat on our poll. Back to you.
All right, Abhishek, thanks very much for that. So that's banks, and we'll come back with more in a bit with Abhishek. But ICICI is the big one, and along with Kotak. JSW Energy is the next one we're focusing on. Vivek has got details on this one. Vivek, morning.
Well, good morning. That's right. So JSW Energy, it's been a strong quarter from the company this time around. Now, largely aided by very high merchant power sales volumes, along with higher realizations. The revenues have jumped up by almost 36.5% on a year-on-year basis. Also aided by the newer acquisitions kicking in this time around. So revenues close to 3,260 crore. Now, talking about the EBITDA, the Mitra acquisition working very well. It has actually surpassed what the company's internal targets itself were. EBITDA is higher, has more than doubled on a year-on-year basis, coming in close to the 1,886 crore mark. Margins this time around 57.5% versus just 37.5% on a year-on-year basis. And when you're talking about profitability higher by 82.6% on a year-on-year basis. Now, what has actually worked, especially in terms of the EBITDA margin improvement, a lower coal cost, this is something that has aided. Also, the merchant tariffs this time around, given high power demand, has actually come in much higher than what the clearing price at IEX was. Elara, however, maintains a sell stance on the stock. What they're saying is that largely on account of expensive valuations, JSW at this point of time is trading at 23 times FY26 price to earnings and 11.7 times FY26 EV to EBITDA.
Right, thanks a lot for that. Well, the other positive news flow came in from Paytm, where the EBITDA has improved quarter on quarter and year on year. Abhishek is back with us to tell us. He's also tracking RBL as well as L&T Finance. Abhishek, over to you.
Well, Sonia, to begin with Paytm, the total income is up 32.2% YOY and 8% quarter on quarter. As you mentioned, the EBITDA continues to improve. So EBITDA is at 153 crore versus EBITDA loss of 166 crore in the same quarter last year and versus EBITDA profit of 84 crore in the previous quarter. In terms of contribution profit margin, that continues to expand. It's now at 56.6% when compared to 55.7% in the previous quarter and about 44% in the same quarter last year. Net loss that continues continues to reduce. Now it's at 292 crore versus 358 crore in the previous quarter, and about 571 crore in the same quarter last year. In terms of RBL Bank, strong quarter over there, and like-to-like basis, because they have a one-off, like-to-like basis, the net interest margin has improved both YOY and quarter-on-quarter. Annualized slippage ratio of 2.84% is perhaps one of the lowest that you are seeing in last 12 quarters. Asset quality continues to improve. X of Q3 FY21, the dispensation quarter that you had, asset quality is the best in last 16 quarters, and risk in the balance sheet is reducing. RWA to advances ratio, that's at 14-quarter low of 117.2%. In terms of P&L, the NI is not comparable. However, the PAT is a beat on our poll. L&T Finance, the asset quality has improved. Gross NPA ratio is down to 3.27% when compared to 4% in the previous quarter. Net interest margin is perhaps at an all-time high for them, as they are focusing on the retail portfolio, which is driving this net interest margin. It's come in at 8.6% when compared to 6.9% YOY and about 8.06% quarter-on-quarter. In terms of return ratios, ROA and ROE are the best in last 16 quarters and 15 quarters respectively. P&L, it's a beat on our poll, both in terms of NII and PAT. Back to you.
Okay, thanks for that, Abhishek. Well, let's hop across to Reema. She's here to tell us about some other companies that will react to its numbers, namely Tejas Networks and Amber. Reema?
Hi, good morning. So let me start with Amber, where the top line growth is very strong at 24%. But the disappointment is that the street was hoping that they will report a profit this time, but they have reported a loss. Therefore, even the margin expansion has been less than what the street was anticipating. For Tejas Networks, the big highlight in the quarter was that large 7,500 crore of a deal that they won from TCS for executing a BSNL order. Now, that led to a very strong revenue growth. In fact, the revenues for Tejas Networks is the best that we've seen on record. They managed to report an EBITDA profit in an absolute terms. After 2 consecutive quarters of loss, their order ballooned to all-time high levels because it was such a large 7,500 crore order win. The only issue is the company's reported a loss this time on the bottom line, because to execute this large order, the company had to make certain investments in manufacturing facilities, R&D. They had to source some components, pay extra for that. So that led to a loss on the bottom line. But other than that, it's a very good quarter for Tejas Networks. For Amber, as I said, the only disappointment is that the company didn't report a profit as the street was hoping for. Back to you.
Okay, well, Reema, thanks very much for that. But let's move on with, Ipca Labs and Zydus Life, which also reported. Ekta has got details. Ekta, morning.
Thanks for that. Well, big news which is actually coming for Ipca Labs. This is a story that I've been tracking since 2014, where 3 of their facilities were in fact issued an import alert by the US FDA. So the news is that one of the import alerts, based on the fact that they've received an EIR with a VAI classification, which is basically an establishment inspection report with a voluntary action indicated classification, it probably means that the import alert for one of their facilities now stands lifted. This is the Ratlam API plant. It manufactures APIs. It was issued an import alert in March of 2015. Since then, it's been under import alert. And now with this, it's probably lifted. It was inspected in June of this year and was issued 11 observations. They probably managed to solve those observations successfully. Nomura has a buy with a target price of 1133 on Ipca Labs. They've said that the site classification for Ratlam as VAI is a positive surprise. Now, separately, I'm tracking Zydus Life. They've received US FDA approval for a new drug application, which is used to treat type 2 diabetes. It is basically, it contains the active ingredient sitagliptin, and the company says it's a milestone approval for the company. They do have limited competition within the branded space for this particular drug, and hence it should be a positive for them.
All right, thanks a lot for that. So let's do one thing. Let's just do a quick read-through on all the stocks in case you missed out on any of them. Of course, stocks with positive news flow: ICICI Bank, JSW Energy, Paytm, RBL Bank, L&T Finance, Tejas Networks, Ipca Labs and Zydus Life. While stocks with negative news flow: Kotak Mahindra Bank and Amber Enterprises. Well, let's find out what's the latest in the world of crude. Of course, the geopolitical tensions have only escalated, unfortunately, at the Gaza Strip particularly. But Manisha Gupta is joining in now to give us a roundup of what this has done to the commodity markets overnight. Manisha, good morning.
Thank you for that, Sonia. Well, we've started Asia on a slightly weaker note when it comes to many of these commodities. After 2 weeks of gains, crude prices have come off its highs. While the risk premium continues, but the aid convoys have started to arrive in Gaza Strip, and that has led to some profit taking. Also, with U.S. suspending sanctions on Venezuela means that crude will also start coming into the market. Of course, we're still dealing with some deficit in this quarter, and that would continue to keep the crude prices around $90 a barrel, as you can see it even now. Some profit taking is what we're dealing with in sense of coal prices. Steel and iron ore have come off its highs as well. The Chinese demand, while is estimated high ahead of the winter demand season, it also has to do with the fact that property sales for the month of September fell by 19% on a month-on-month basis. That is what is weighing onto the metal sector right now.
Okay, all right. Manisha, thanks a lot for that. For the time being, we'll slip into a short break. On the other side, we'll get to some fundamental analysis. Prakash Diwan will be joining in to help us out with that. Don't go anywhere.